All right, traders, welcome. It is Monday, August 5th, 2024, and a pretty red day in the market today, especially for our portfolio. Took a pretty good hit. So let's talk a little bit about that. We'll talk a little bit about the account. Yeah, it took a really nice, big, giant drawdown today. It is what it is. We had a great year running. We'll have a great rest of the year, I'm sure. But today certainly not looking too pretty. And let's get into it. Talk a little bit about it. So, first off, I just want to talk about what happened today. And really, what happened was a reaction to just a massive 12% sell-off in Japan as the Bank of Japan announced plans to tighten their monetary policy. It's the first time in like 17 years. They're trying to stabilize a weak yen, and they just triggered a giant global stock market frenzy overnight last night. Now, a couple things happened to exacerbate things. So number one, and I really don't think there's a whole lot we can do as premium sellers, especially premium sellers on futures. I don't think there's a whole lot we can do. Hedges held up okay, which was not bad, but it wasn't the hedges that was really the problem today, was getting out of some trades. I want to talk more about that, but let's talk a little bit of just about what's going on. Then we'll talk about the actual trading itself. So why are stocks dropping? Well, that Japanese central bank move, not helpful to the markets. You got a little bit of Middle East tensions happening. But we've really been dropping in the markets for a couple of weeks now. In fact, I think it was July 17th, I put out a video saying market correction ahead potentially. So I was really warning of a market sell-off 2 weeks ago. So I gave everyone, including myself, ample warning, overbought conditions, rolling over, very concerned at that point in time. And I urged people to shore up some of their positions. I did a ton of work in the Discord group over the last week of getting people to shrink their size. And we had that one great up day last week. I don't know what day was that. I think it was last Wednesday. So last Wednesday, we had a really nice big up day. And I told everybody, this is it. This is the reprieve. This is the hand of God telling you, if you're too big, you can fix it now. So everybody had the chance. And I really thought people were trading too big. And I talked about it here on the YouTube channel. So hopefully, a lot of people took that advice and shrunk their portfolios down. We should also have been getting a little bit more bearish because the market was oversold. It was starting to roll over. We talked about market sell-offs coming ahead. We had some warnings the last really 2 to 3. We had 3 straight weeks of down moves. So 2 heading into the middle of last week on that reversal Thursday. That should have been a good reason to really start to pair things. I'm going to talk about what I did wrong, how I plan to hopefully fix some of that. But I'm pretty much sticking to my plan. So let's talk a little bit about it. But the S&P is now down 6%. So it's not the market move that's been bad. It's volatility that's murdering us. The Nasdaq's down 12%. Again, it's not great, but it's not the reason that we've lost trades. The Dow is down 6%. Big deal. So I don't know if anybody even cares if the Dow falls in the woods, it make a noise. So a couple of reasons this market decline is happening besides this Japanese central bank that is probably the worst central bank on planet Earth. That yen is like a yo-yo. They can't control anything over in Japan. So that is the worst thing. That's why I will never trade Strangles or trades on the Japanese yen. That's the most manipulated and worst currency on planet Earth. Don't ever trade that thing. So you got the Japanese problems. You got some tensions in the Middle East. You got potentially a little bit of concerns about AI being overhyped, maybe a little bit. You got the Mag 7 putting billions into AI, but maybe it's not really helping the bottom line right now. So that's not helping. We didn't have great earnings for the most part. We had a couple companies with some decent earnings, but for the most part, earnings have not been spectacular. We had that giant outage a week or 2 ago from CrowdStrike. We had airline problems. So there's all kinds of things going on. We've got oil continuing to drop. We have production uh, you know, no production cuts, I should say, coming. You got production cuts expiring, so oil is keeping being produced. You got China using less oil, so oil is dropping. Okay, so you've got all kinds of recessionary fears. Then, okay, not only do we have all these high valuations on stocks, we see some sector rotation out of tech and into some of the defensive stocks. Okay, not helpful for the overall market. The jobs report on Friday, 114,000 new jobs, which is way below estimates. And unemployment cranked up to 14.3. I made the video on it last Friday talking about, well, bad news is now bad news, and good news is now good news. Well, everything is bad news right now. You're also thinking, did the Fed wait too long? Are they going to push us into a recession because they left these rates high and they should have cut by now and they haven't? And now are they hurting the economy? Today's PMI numbers, probably blah. So it really wasn't the story today. But these are, these corrections, they're things that happen. And typically these corrections are going to happen every couple times a year. You're going to get these 10% moves up or down. Now we're not there on the SPX, but we are in correction territory on the NASDAQ. It's normal. It's part of the deal. They can last for months, an average drop of about 14%. So we're not really there on the S&P, but maybe we get there. Who knows? Fed may have to cut rates to support the economy. If the Fed has to cut, I think that will be perceived as the Fed is overly worried, and that could also cause a market sell-off. So lots of bad cross currents here in the markets, and certainly our type of trading. If you're a premium seller, you're going to be affected by it. If you're holding stocks, you're watching your stocks going down 10, 20%, probably 12 to 20% down on those stocks. As premium sellers, especially as traders of the 112, this is not the worst thing in the world. In fact, 2022 was my best year of trading ever, up around, I think, 82% for the whole year, because we had a nice slow market decline. Even though there's a little bit of volatility there, we really didn't see anything. Okay? And you have to go back past COVID to see a volatility spike this big in a day or a week. Okay? Even the COVID spikes were only about 15, 16 points. You're talking VIX spikes today. At one point, VIX was at 60 on the session today. So we'll take a look at some charts here in a moment, but that was bananas. And what happened overnight was you started to get some sell-off because of the Bank of Japan news and recession fears, a little continuation from Friday. And Friday, we stopped out. We closed down some naked puts. So we did take a little bit of action on Friday to do that. And then last night, markets opened up and everybody panicked. So because, hey, the markets are selling off, the bid-ask spreads got gigantic. You could drive, the space shuttle through them. So, gigantic bid-ask spreads, and then volatility was cranking way up. So it was jacking up the premium on the options, making it very difficult, okay, to hang in there. Now, our plan typically on most of our trades is like a 2x loss, so a 200% loss. It's all good. We size those to be like 2% of our account. So if we lost on every one of our long-term trades, long-term 112 trades, okay, we have 6 of them on at any given time. So we've only ever got 6. If we lost all 6, you would think we would be down around 12%, okay, at 2% per trade, maybe 13, 14% with some slippage. However, that was not to be the case because volatility, and it was Volmageddon again, that came out of nowhere and really bit us in the rear end on it last night. So now you're trying to get out of trades and you're 400%. That's you're at a 4x loss or a 3x loss. So we did manage to unwind a few trades last night, but I wanted to leave some more on this morning because really was waiting for the market to open so those bid and ask spreads will start to come together a bit because we're stopping out at like stupid prices. But you got to stop out because it's way past your stop. So people are stopping out last night. I totally get it. It sucks. Same with me. It sucked. Okay. So went to bed. Slept fine, got up this morning, and the market's now down. Instead of 70-some points, it's now down 150. Volatility is spiking up. Now you got to just wait till the open, see how things how things go. So once we got into it, our BP spiked up because of the volatility. So it pushed all of the margin up. So now we got to control margins. We ended up having to take off a handful of trades today. So we took some pretty good losses on trades, but it wasn't just the 112s today. We had 2 bond strangles that were in perfect shape that went ballistic on bond move because the bonds shot way up. We got stopped out of those 2 strangles. Had an oil strangle on. Oil continues to tank. Oil tanked even harder a little bit after the open this morning. Had to stop on oil. We also had a euro. And if you're watching the Aussie dollar strangle. Now that one we're still in and we're still good with that. But that's very closely tied to the yen a little bit. That experienced some pain this morning. So every single thing except gold that we were in was experiencing some pain all at the same time. So while I feel we were diversified, it was the perfect storm. Okay, we have not seen a volatility spike like this for years and years and years. In fact, it was not even this bad in COVID. I think today was actually overnight and into this morning was worse than COVID. Okay, so it was one of the worst volatility single day spikes we've ever seen. The market was down 3%. That was not the reason for any of us getting stopped out. In fact, if volatility had remained under control and we kept just going down a couple percent a day, I think we'd all still be sitting here with the majority of our portfolio in pretty decent shape. Okay, we did have hedges on. I put another hedge on last night, which paid off this morning. But I'm very happy with the hedges I had on. So the hedges I had on did exactly what I was expecting. Okay, they would have covered not all. They would have covered probably 60 to 70% today of the naked puts I had on. So they acted great as a short-term and a black swanish hedge. They are perfect. I loved exactly where we were on that. The problem was we could not stop out of our naked puts at a reasonable price because gigantic bid asks, gigantic increase in volatility. So when volatility came down, we were able to get out a little bit more reasonable, but we took a pretty big hit today. Overall, we took a $185,000 hit on our $530,000 portfolio. So that's a pretty 35%-ish hit. What is it? 185 divided by, we'll say 500,000 because we did. Okay, and that, about 37% hit today. So 37% drop in our net lick. We did not stop out of everything or close everything. We still have some trades on. We do have our hedges still on. We'll see what the market does tomorrow. We were left with a pretty good, I think, reversal candle. I would not be surprised to see the market recover 50 to 100 points tomorrow at least. Okay, but I don't think we're out of the woods yet. I still think that we have more downside to go. All right, so let me give you a couple things that we talked about in our members meeting today. So I did a Zoom with everybody and tried to keep everybody calm and everybody rational because it's big losses and we really don't want these. However, we have such a fantastic win rate that it took an event that we have really not seen before of this particular magnitude of drop, coupled with a 100% spike in volatility in the VIX. Crazy one-day outlier event, similar to a COVID, but worse, I think, than COVID. COVID, I at least had a couple down days and a couple up days, okay, but none of the down days were hitting 60 or 50 or 60 on the VIX. Okay, they were a lot lower. So pretty good drop. I'm glad we had hedges on. I'm not a big fan of lots of different hedges, but the ones we had, I thought performed extraordinarily well. Very happy with that. So I think that part of our plan is pretty well dialed in, but I'll tell you what I did wrong. And here's number one. So I'll give you 4 things that I did wrong that hopefully you can take advantage of here as we live to fight another day, and it's going to take us some time to put this money back. We had a great first half of the year. I expect we're going to have a great second half of the year when we still have lots of put debit spreads on. So if we continue to sell off we're going to be in great shape. If we rocket back up, hopefully we'll get some trades on, take advantage of that as well too. This is part of trading. It's what happens in trading as long as you're sized appropriately, okay, and you have a plan. It's hard to have a plan when the market's flipping bonkers. And what's even worse was if you had a small portfolio and you were trading MES, you couldn't get out of MES. Okay. It was absolutely, I hate it anyway, but it was absolutely the worst underlying to get out of. If you had MES, I feel bad, okay, because that thing sucked and nobody could get out. My kids had some smaller accounts with MES, struggled all day mightily just to get out of some of those trades without taking an absolute beating because you couldn't get out of MES. ES wasn't quite as bad, especially after the market opened about a half an hour in. Things started to come together a bit with the bid-ask, which certainly made life a whole lot easier. But that's hindsight 50-50. Did you want to wait until the market opened, or did you want to get out in case it got worse? So you had to do what you had to do, whatever was best for you. Hopefully you did that. But big takeaways, and I've been saying this, and I know Tony from Mexico says this as well, but quantity matters, okay? Not size necessarily, but quantity matters. The quantity of naked puts for me was a problem. And it's not the 111 versus the 112, because that argument was put to rest today, I think, because we have portfolios with 111s that I run. They all stopped out, okay? All of the 111s were stopped, okay? Some of the 112s still slightly alive, at least one or two still slightly alive. All the 111s stopped out. Now, the big difference was you still got stopped out, so it didn't prevent you from hitting a more than 2x loss. I mean, there was losses on 111 trades where the naked puts were coming off at 3 or 4 or 5x or something. Okay, so 111 versus 112, they all sucked today. Okay, but what is important is the less naked puts you have, okay, the less of the overall P&L loss that you have. So you got to figure out, though, if you're going to trade a 111, you're going to give up gains. Okay, you're not going to make as much, okay, but you might not lose as much. But I think it kind of washes itself out. Do I want to make 2 or 3% a year, or do I want to make 1 or 2% a year? Okay, 12% difference or 20% difference in how much money I make. I don't know if it's worth it. Anyway, so you're giving it up on the front or the back end either way. But you guys can all argue that. But what I did do that was a big problem was I also had some XL112 trades on. And those for me are spec trades. And I put them on with wide put debit spreads to act as not a hedge necessarily, but a bit of a hedge and take advantage of the market dropping. Okay. I didn't expect that the market would drop this fast with this much volatility. So I had added extra trades with ES naked puts on them, even though they had big traps. Okay. And those got into trouble as well. I had too many spec trades that were not part of the long-term 112. If I had only had the 112 trades on, the long-term 112 trades on, I think I'd have been totally fine here. Yes, I would have lost 20%, 25% of my account, but I would not have lost 37% or something in a day or something like this. I think I would have been down maybe 5%, 10%, and maybe on Friday, and maybe another 15, 10% or something today. It would not have been anywhere near that, but I had too many naked puts on, and I called the sell-off, and I still didn't plan accordingly. I had hedges on. I just didn't take off the naked puts, and I left trades on that were probably not appropriate. I shouldn't have had that many naked puts on. So that's one. Number two, you got to stay mechanical, and if you hit the 2x loss, you got to take it off. Okay? If volatility expanding and world's going to hell in a handbasket, you got to close and get out. Okay? Waiting for most people was bad. Okay? Some people got rewarded because the bid-ask spreads. I got rewarded a little bit by not closing out. I closed a couple other trades. I closed some Strangles. I had buying power. Keeping my buying power at 50%, huge saver here, okay? Because we didn't have to close a ton of stuff to keep buying power under control. So at least I had buying power once I closed one or two trades. I was able to keep my buying power where I could then add some long puts, which I did. I had an $8,000 long put day today, so I made 8,000 on just that long put. It didn't make a huge dent into the big ass loss that I took, but that helped a bit today. I also put on a 0 DTE trade today. The premium was so great that I sold a call credit spread 0 DTE. That was a 90. I left that thing on for a full 95% winner. So some positive trades on today. I also think got to take a look at buying power. I think I was good at 50%, but I think when the market gets overbought like it was, and I was calling the fact that it was overbought and a sell-off was coming, I didn't do anything about it. Okay. I didn't lighten up on my buying power or my positions or my naked puts. I just told everybody else to do it and reduce their size. My size wasn't the problem, so everything was sized properly. But what I didn't do was I probably didn't take some trades off and heed the fact that we were overbought. I could have taken some of the winners off, maybe a little bit less of a profit. I didn't do it, and I will do that next time when we get to overbought situations. I still don't believe the whole. I love Tasty Trade, but I really don't believe that whole VIX chart now, where VIX is 12, only be 20% in the market. If it's 15, be 30% or whatever the heck that thing is. However, that would have also paid off because it would have kept you smaller and kept you out of certain trades. Would have been helpful, but this is a one-day black swanish type event that almost never happens. So I don't think you should just scrap all of your trading plan. Okay, we live to fight another day. We'll be in good shape. The last thing I did too is I only closed the naked puts, not the traps. The traps or the put debit spreads, they're not paying off a whole lot when they're at 80, 90, 100 days out, 70 days out. Okay, and the volatility is up, which means the short puts of those aren't doing any good. They're not offsetting. Don't have enough decay, so you're not getting any help. And I don't put on a 112 put debit spread. That is not a hedge. Okay, what that is a bonus if the market starts to slide. Okay, what we don't expect is the market to slide 6% in 3 days, but have volatility spike up 100%. That was the killer. And I don't think you can really hedge volatility well. I'm sure some of you are going to tell me, well, here's how I hedge the volatility. Volatility is very expensive, it's very costly, and very rarely does volatility spike. Okay, so if you hedged it, okay, congrats, you got lucky. If you had your black swan hedge on, a true black swan hedge didn't do great, but if you had a lot of extra long puts on, you probably did better. I've heard some people made some good money. I've also heard some people say that the black swan hedge absolutely did nothing and they actually lost money on their black swan hedge today. So really all depends on the type of hedge you had. I loved what I had because there's no short puts involved in my hedge. It works in these types of markets and it works in a black swan event. It worked exactly the way I expected it to. My problem was I couldn't stop out. So we took a pretty substantial loss today, but we'll be back. The one great thing is we are traders. This is what we do. Okay. We're going to take some losses, okay, but we're going to stay consistent with our plan. If you give up on your plan every time you take a couple of losses, you're going to be searching for trades. I guarantee you people are going to switch from a 112 to a 111, or going to switch to a 1132 or a 11678 something. I guarantee people are going, or they're just going to give up on trading futures because they had a bad day. And it is what it is. But where are you going to go to find other consistent type of trades? You're going to go wheel yourself. Okay. Did you see what happened today? Okay. Apple. Okay, let's even look. And then we'll wrap up with you guys because you don't need to hear me yammering on. But hopefully this is helpful to you to know that you are just not alone with the market dropping, because I took a pretty substantial hit today. But here's the S. This is a really nice reversal candle. Wouldn't be surprised to see a little bit of a bump up here, maybe into this 5,400 area, and then a tip back over. We're not oversold at all on the weekly chart. So there could be much more damage potentially coming, but I think a bounce might be first. We take a look at oil on the session. Decent down day, but it held the trend line and finished well off of its lows. Unfortunately, this poke below stopped us out, okay? And then it would recover, which always seems to be the way. Bonds, just on an absolute flipping tear. I've been telling you to get long bonds. I was long bonds. I just had closed so many for winners that I didn't have enough back on. And I was afraid to get back in, thinking that we were overbought. It didn't make sense. But I left Strangles on, and those Strangles got annihilated over the last two sessions. And not annihilated, but they hit their 2x losses. Gold, a little bit of a sell-off today, recovered off its lows. Gold's just not doing anything in here. The Aussie dollar, as I mentioned, huge tank in the morning, recovered. We didn't get stopped. We're fine. We still have a strangle on. The 6E, though, which is the euro, this, look at how nicely tied to the 21 EMA and flat everything in here. Okay. And then just 2 days of just ripping up action stopped us out to the upside. So we're upside, we're downside. Either way, you're getting the snot beat out of you, but it's okay. Here's the VIX. I mean, look at this thing. This is an absurd move on the VIX. Okay. Opened today at 23, spiked to 65, finished off the highs at 38, but still up 65% on the day. Ridiculous move, way overdone on the VIX. And you have to go back. Okay. I'm going to show that chart and then we'll hit the put call. I mean, you've got to go back here on the VIX to COVID. Okay. And this is the monthly. Let's go to the weekly. And let's go out like 5 years here. Okay. If we're looking at the weekly, you've got to go back to COVID here to see anything that was topping today. And it was only 3 days ever during COVID did we spike higher than we did today. Okay. It took week number 3 and week number 4 and 5 in the COVID sell-off to break what happened in 1 day today. And if you look at the size of these moves, today's wick is longer than any of those. So again, outlier move, in my opinion. I don't think you would change your entire trading plan for this move. Okay. I think there's things you can do, okay, here to be better prepared, but I'm telling you, we were prepared and we didn't listen to ourselves. So if I'm looking at the trades in here, okay, here's the put call ratio. This is exactly the day on the 17th that I said, look out for the sell-off as we started to reverse the next day on the 18th. Trying to look at the YouTube channel just to see what day that video was. But I know we talked about the sell-off right in here, and you can see we absolutely top ticked it, hit the bottom here. So we're moving up solidly on the put call. The market's tailing down. That's exactly what we thought was going to happen. And I put that video out on actually July 11th. So actually right here, this is where I said, sell-off coming. Are you ready? The sell-off is coming on July 11th. Okay, a couple of days later, okay, 3 days later is when it happened, and we started selling off. My problem is I didn't take my own advice, okay, and pare down some of my positions, which I will absolutely do this next time. But if you're an Apple, I mean, you're down from 230 to, at one point today, 200. You were down 15%. Now, in the last 4 weeks, you're down 15%. In Microsoft, you're down from 460 to 400. You're down 15% in Microsoft. And then we're also down, like I said, SPY, we're down a bit. Let's take a look at Amazon. Okay, if we look at Amazon, where are we here from the highs right around that July 15th? Yeah, we're down 17% in everything in Amazon. So, all of these tech stocks, I don't care what you're in, you've been taking a pretty good beating for weeks and weeks and weeks now. Nvidia from 190 to 155 and change. The only thing's up today, AMD held in there really nicely. So I like AMD. Potentially CrowdStrike, actually, believe it or not. CrowdStrike held in a little bit today. Bitcoin got smoked today. Ethereum got smoked today. It was a global meltdown everywhere. China hung in there, but still down. Palantir, after hours today, this thing's up fractionally, but Palantir held in there today pretty well, bouncing off to 21. So there's a couple things that are doing pretty well, but overall, it's this VIX mess that was the problem for us today. So took some lessons away. We took a pretty good hit down. It is what it is. We'll just make this back. I am sticking to the plan. For the most part, I may make a few tweaks, not to the trade strategies, but kind of how I manage those trades. I am not jumping into anything tomorrow or today. I did a 0 DTE today because it was helpful, but I'm not jumping right back into 112s tomorrow. Let's let this market settle for a day or so. Then I'm going to get back into 112 trades. Like I said, I'm not switching to 111s. That did not help at all. Yes, my 111 trade account is down less than the 112s, but not substantially enough to warrant moving to that, simply because I'm not going to give up that kind of income potentially to save that little bit of difference in there. I'm outperforming, if I'm 15% difference in what I'm down with 111s versus what I'm down with 112s. If it's a 15% difference, but I make probably 15 to 18% a year, I'm okay with it, considering that this was an event that hasn't happened in 4 years. And really, it's never happened like this, at least for a long time out. So we'll be smart. We have time on our hands. We'll put the trades back to work. We'll hit the books tomorrow. I didn't see any trade setups anyway. We'll start to leg back into some of the 112s. Hedges are in good shape, so I love where we are on the hedges. If the market goes down a little bit tomorrow, I think we'll be in good shape. I have a few trades still left on. Didn't stop out of everything, so the hedges are still on. And we'll keep plowing ahead. All right, I hope everybody had a safe day. I know it sucks. I'm with you. I lost a bunch as well, too. My account is down pretty substantially, but we live to trade another day, and we'll get back at it tomorrow. See you, everybody. Bye-bye.